Do you have an indicator of choice that you would like to use if were you doing this?
Oh yeah, I am a through and through RSI fan. I mean, I know RSI is probably the most widely used indicator out there. Its beauty lies in its simplicity. The formula is foolproof. You know, you cannot fix that formula. It's very basic mathematics because for anything to go from 20 to 100, it'll have to go through 30, 40, 50, 60. Nothing can ever jump from 20 to 100. So there's a lot of things in RSI, and I personally have around 6 to 7 different ways of analyzing the RSI itself. I have over the last
Got it.
10 years I've experimented a lot with the RSI periods and which RSI to, which period to apply in which time frames. Then the time frames I use are very different from the usual time frames that people employ. And I have a tendency of also always looking for the concept called eclipsing in my charts. So, say you are following an intraday time frame of 15 minutes or 75 minutes or 60 minutes, whatever is your comfort. So, you look at the 15-minute chart, it's giving you a bullish indication, but the 75-minute chart is calling it bearish. What will you do? Right? But if you're only looking at 15 minutes, you're going to end up making the wrong decision. So what I personally prefer to do, I'm a swing trader myself. So what I prefer to do is I always start with the weekly time frame, determine the trend, and see if the daily time frame, 75-minute, 15-minute, and down to the 3 minute are all aligned. If there is a mismatch in the story being told to me by the chart, then I don't participate in that stock. So that helps. And as far as the screener is concerned, you can use a screener as the first step just to determine whether the basic hygiene metric is being met. So for example, in RSI, I don't want to trade a stock which has very recently breached the level of 30 on the 75-minute chart. And by recently, I mean in the last 2 weeks, because any stock needs some time. And the beauty of RSI is that it doesn't behave in the same manner across all stocks. It adapts its own behavior according to the momentum of the stock. So because every stock has different personality, RSI will adapt itself to the personality of the stock. And for
Right.
me, that works really well.
Wonderful. So you mentioned that you mentioned a 75-minute time frame. So what is typically the time frame of a trade that you're looking at when you look at a 75-minute chart based RSI?
So for me, in my swing trades, my holding period is never less than 2 weeks, and but it can be more than even 3 months, sometimes even 6 months,
Right.
right?
Right.
So a 75-minute chart comes in very handy for analyzing those time frames. However, whatever the 75-minute chart is saying, I would expect the 15-minute chart to say that out louder. You know,
Right. Right.